Hello and welcome to Nordnet. John Hamilton, the CEO of Panoro Energy, will join us in today's session. Panoro Energy is an international independent oil and gas company headquartered in London with production, exploration and development assets in Africa. The company was established in 2009 and its shares are listed on Oslo Stock Exchange. My name is Roger Berntsen. Before we move on, it's important for you to know that this session shall not be considered as investment advice. Our only goal is to learn more about Panoro Energy as a company and, of course, its underlying industry. So, John, first, thank you for joining us today.
Thank you, Roger. Thank you very much for having us again.
Yeah, and now, first of all, you will go through a short presentation and we'll wrap things up in a Q&A session.
That's right.
Yes.
Thank you very much. So, welcome everybody, and thank you for listening in to Panoro again. It's been a few months since we were last here, and I thought we'd use the occasion to come in and give you an update on the company. We have a lot going on in Panoro. So I'll take you through some slides, as Roger said, and then we'll do some Q&A. I'm sure Roger's got some questions. So as a reminder, Panoro Energy, we are Oslo listed, main board. We are considered here in Oslo as the sort of the pure African play on the oil and gas space, E&P company. We're in Africa from north to south, Tunisia, all the way down to South Africa. And in the middle, we've got lots of production, oil production. This is not a gas company, it's a pure oil play. At the moment, we have some developments on gas, which I'll touch on as well. Our market capitalization is around $340 million. We have a solid reserve and contingent resource base. At the moment, we're producing around 8,000 barrels a day. Just to touch a little bit on the governance of the company, we have an extremely strong board that's comprised of Norwegians and non-Norwegians. We have Julian Balcony, our chairman, Torsten Sandnes, who's famous from the Lundin group here. He was chairman of Lundin Norway. Alexandra Herger, who used to run exploration globally for Marathon. Our newest addition, Grace Skaugen, is very well known in the Norwegian markets, also with the Lundin group, amongst others, Equinor. Garrett Soden, who's also from the Lundin group, and Hilde Adland from Vår Energy. So we have an extremely strong board, particularly for a company of our modest size at the moment. And I think that this is really one of our strongest selling points, is the strength of our board. Our management team, we're still lean and mean. There are 4 of us being shown there. There are only 15 of us in the company, really. And so we've always maintained quite a modest footprint, trying to keep our costs down. We've also recently been announcing the appointment of country managers in each of our countries of operations. So we are very, very committed to local management in our countries, and we've managed to select extremely high-profile local individuals who help us manage our business and our interface in these countries, which is a vitally important part of the Panoro story, making sure we're connected in the countries in which we operate. If I had one slide to show you today, if Roger said this is the only one, this is probably the one I would show. It shows the path that we're on, the trajectory that we're on. We are currently, as I said, producing, as you can see on the chart on the right, about 8,000 barrels a day. 12 months from now, when I sit here, hopefully next year this time, hopefully we'll be doing about 12,500 barrels a day. So we have organic growth within the company. This is not through acquisition. This is projects that we have on the go as we speak. These projects have been committed, funded, all approvals are in place for them, all the contracts have been signed. So this is the interesting thing, I think, to watch for Panoro. So we have a production growth in the next 12 months of more than 50%, perhaps even as high as 60 or 70%. The second important part on this slide is that the production is diversified. We're not in one country, we're not in one oil field, we're in several. And so we have a diversification in our portfolio that allows that if there's slippage on one asset, that perhaps one asset will do better while the other one does worse. And this is vitally important for a company of our size to have this diversification. The third point I want to make here is that our oil production is unhedged. If you're very bullish on oil price, which we are, although we're very happy with the oil prices where they are now, but we still think there's a chance they can go considerably higher, we are unhedged. So we have no hedging in place of any materiality. So it's an interesting one to watch, I think, what happens with oil price as we grow our production base over the coming 12 months. It's vitally important when we're looking at our financials. I won't dwell on this slide too long, but our financials are driven by oil liftings. In other words, when we sell oil. So we produce oil every day, but we don't sell it every day. And so our revenue that bubbles through our financial statements, it can be a little bit lumpy. So sometimes you'll have funny quarters where not much happens on the balance sheet or the P&L or the cash flow statements. And then you'll have other quarters where everything is happening. So we always tell people, keep an eye on this. We try and provide guidance of when these liftings are. And as you can see now, we're going to have a very, very busy second half of the year with over 2 billion barrels of oil sold in the second half of this year, maybe leaking into January a little bit there. So we're going to have a very, very strong second half of the year, probably a record second half of the year for us coming. I won't go through all of our assets, but I wanted to point out two in particular. These are not our production assets. Our production assets are very solid, and perhaps we'll have some Q&A on them, I'm not sure. But we have an exploration well as well, which is going to be drilled. It's spudding in about 2.5 weeks. It's in South Africa. South Africa on the west coast is probably, along with Namibia, which is just north of it, is probably the hottest exploration zone in the planet right now. You've had Shell and Total finding very, very big oil fields in this region, and we're the next to go. We're drilling a well. It will spud in the very end of September. It'll probably take 30 days to drill. And we're targeting an area that has already an existing oil discovery on it. So this is a very interesting play. It could be quite material. It could be as big as a few 100 million barrels. Obviously, it's exploration, so there's risk attached to it, but it is a very interesting potential catalyst for the company. And so you'll hear us press release probably in 2 or 3 weeks that we're spudding the well, and then hopefully 4 or 5 weeks from there, we'll tell you what happened with the well. But this is quite exciting, and a lot of people in the markets are watching this well. A lot of people globally are watching this well. It's quite an interesting one. The second thing that we announced recently, and it gets a little bit into our ESG, we are an oil company. We recognize the energy transition, and we are trying to find ways to express our commitment to the transition without, of course, disrupting what our underlying business is, which is to generate cash for shareholders' returns. But we have taken on a permit in South Africa. And there we are looking to exploit biogenic natural gas that in South Africa is dependent on coal for something like 80 or 90% of its energy and its electricity. We are looking, together with some other companies that are a little bit ahead of us on this one, to find local gas that can be put into the markets to displace coal. So in other words, trying through the use of shallow gas to displace coal. The second interesting thing about this block is helium. So in this part of South Africa, you have helium that's associated with this gas that we're talking about. Helium is an extremely rare gas. It is no carbon, so it's an extremely rare gas that sells at very, very high prices and is very rare. Right now, some of the biggest producers in the world are Russia, Qatar, places like that. And so if you can find helium, which is a strategic gas used in the medical technologies, rockets, energy transition as well, this can be quite an interesting area. And we are looking to go early stage and try and see if we can't find helium and gas as part of our ESG commitment. This is my last slide, Roger, just as a summary to who we are and what we're doing. When I came and spoke to you last time, we talked about these acquisitions that we made. So the first column there, acquisitions that have transformed us. These are acquisitions we made about 1.5 years ago. We're pleased to announce yesterday that we broke even after 18 months on one of these acquisitions. So it's extremely fortuitous time to have been buying assets. That has created this company that you're seeing now, which is a very robust oil producer. The production is diversified. Again, getting back to my point that for an oil company of our size, diversification is critical. You don't want to be over-reliant on one country, one asset. We have a diversified asset base. And our growth profile is very visible. We hope to increase our production by 60% or more in the coming 12 months. Our balance sheet is strong. We're in a very strong position. We have low operating costs, and we're going to be generating a lot of free cash flow, which, getting to the final point, is going to generate the capacity to pay shareholder returns. We paid our first dividend ever as Panoro last month, where we distributed shares of another company called Petronor to all of our shareholders. So all of our shareholders will have received a dividend just last month. But we're committed to paying cash dividends as soon as practically possible. And you'll probably hear more about that during our third quarter results, where we'll talk a little bit more about our intentions in respect of cash dividends. So that's my story. That's the update, Roger.
Yes, very good. Thank you for the presentation. Now we take a short break and come back with the Q&A session.
Perfect.